Good morning. It's Friday, May 5th, 2023. It's Cinco de Mayo. Damn, I didn't even realize that. I actually had to look at the date and say it. It's Cinco de Mayo, and it's a Friday. Let's fucking party, guys. Why am I making a market video? Anyway, maybe I'll party a little bit later today. But for now, we're going to make this video and talk about boring market stuff. So start with the E-mini S&P chart. This is a 4-hour chart, and I just want to point out some really simple observations. I mean, look at this level at 40.75. Okay, so first it was tested as resistance back in March, and it proved to be an important pivot point twice in March. I mean, look at this test, and then it drops 200 points off that test. Here's another test of the level, and it drops over 100 points off that. Okay. And one of the simplest and tried and true rules or fundamentals, principles of technical analysis is that former resistance becomes new support. And here we are coming down from 41.98 to 40.68, basically testing the 40.75 level. And we get 120, 130 point lift off that level, come back down, test it again, and we're bouncing again. So 40.75, for whatever reason, this is an important technical level, both in March as resistance and now in April and May as support. So we're bouncing off that level. Based upon the sentiment this week, Wednesday, Thursday, the bank failure headlines, just everything, I feel like we're set up for a Friday rally just because everybody's bearish, everybody's leaning short. There's probably going to be some headlines out about banning short selling in financials or some sort of bigger FDIC guarantee. Who knows what they're going to come up with? But it's just one of those setups where your instinct is to want to short. Your instinct is to want to be bearish. Your instinct is we can't keep having bank failures every week. That's not healthy. The system's falling apart, right? But as an experienced market participant, I know that it's setups like this that often cause some of the biggest short squeezes. So sort of the first upside target's about 41.18, 41.20. And then if things get really wild, maybe we could get up to around 41.32, maybe even all the way to 41.40. That would be my biggest upside target, around 41.40. I think you look to buy any early weakness. That's sort of what I'm looking at here this morning. But again, strong opinions weekly held. Keep an open mind. This could go plus or minus 50 S&P points. Gold. So this is the daily chart. And everything was going really well for gold until Wednesday night. And when I say things are going well, it was acting in a very constructive manner, and it was not getting overheated, not showing too much emotion. There was no blow off top. And then this happened on Wednesday night. Okay. This happened. So, we're trading about 2030, 2035 post Powell's press conference. And then whatever this banking failure stuff came about Wednesday night, and we just went up 50 points in the overnight at the start of the overnight futures trading. And that is what a blow off top candlestick looks like. Okay. Just calling it like I see it. Um, Gold is up $270 an ounce since early March. Sentiment is getting pretty frothy on it. Daily sentiment index was 87 yesterday. And look at what we have today. So we could talk about non-farm payrolls and the fundamental reasons why gold is down, but that's not very interesting. It's just that, quite frankly, it is set up. Walking in today, gold was set up for a sell-off. Now, how far can this sell-off go? Well, I actually don't think it has to be that deep. I think that we could hold support probably between 1990 and 2000. And I would be actually quite happy to see gold retest 2000 either later today or Monday or Tuesday. I don't think that would be a terrible thing. Let people get bearish again, and let's set a new sort of support level, a new support level at a higher base. Um, Something that I've talked about this week on a few occasions is how I think the biggest risk to gold in the near term, very clear to say near term, so in the next, let's say, month or two, would be a sort of counter trend dollar rally. So that would be the euro USD declining. And we have all this anti-dollar sentiment, this de-dollarization sentiment, yet Euro USD can't get above 111. Some people might say, well, that's a triple top. Well, at the very least, it's a double top. You could see this is a double top right here. Now, to confirm the double top, I think we're going to need to see a weekly close below 109. Certainly 109.50 is obviously a key support level. So let's keep an eye on that later in the day. If we do get down to 109.50 in the euro dollar, I expect gold to get down to around 2000. It's just one of these setups where everybody's leaning bearish stocks, everybody's leaning bearish on the dollar, and there's certainly elevated sentiment in favor of gold. I don't think it's anywhere near a major long-term top in gold, but in the near term, gold is going to have a little shakeout, and we're seeing it here this morning. And just from a technical standpoint, this is a spinning top. This candlestick here. Let me get my words right. It's kind of early in the morning. This is a long-legged doji. Okay, this is a doji. You could sort of also interpret it as a spinning top because it does have some body, but okay, it's a long-legged doji. And when you have these big upper and lower tails to the candlestick, but price closes basically where it's opened, and this happens, within the context of this big uptrend, and also price made a new high for the move on that day. The recipe, this candlestick pattern here, this is a bearish pattern. Simply put, this is probably one of the strongest bearish candlestick patterns that you could get in technical analysis. Just the entire chart structure where you have this big long uptrend, this big rally, and then finally the market gets some emotion into it. You get this sort of blow off top on Wednesday night, and now we're printing a full bodied bearish candlestick. But remember, gold is so good at taking everybody's money. Gold futures, the trading of gold futures. So let's yank it back down, get everybody short again, and then we'll rip it back up and take all their money. This is what gold does. The overall market structure. So look at Freeport McMoran testing support at 35 again. Look at Caterpillar testing support at 210 again. Look at the oil services ETF, OIH, testing support at 250 again. Look at Suncor testing support at 28.50 again. So there's so many charts out there. I could go through so many. I chose these because they make the example clear, so many key stocks and key market sectors that are all testing support simultaneously. So there's two basic choices here. Either we're going to break support and stocks are going to fall apart. We're going to be back under 4,000 on the S&P, or support's going to hold and we're going to get a little bit of a bounce here, right? And so you put it all together, and I say odds favor the bounce 65-35. Again, nothing is 100% in markets, but I say the odds are 2 out of 3 or 3 out of 4 that we're set up for a little bit of a rally here in stocks, just based upon how negative everybody is and the overall technical backdrop. These are really big support levels. Are we going to market, are we going to see a market crash when everybody thinks that we're about to get a crash? Everybody's reading the bank failure headlines and negativity is so high. It usually doesn't play out like that. Normally people start leaning to the short side. The headlines get ugly, bank failures. The economy is weakening. We're in a recession or whatever it is going to be, and then the market does the opposite of what the herd thinks, right? And I sort of feel like this is the setup that we're walking into here in the near term. A little bit of an unexpected stock market bounce. Have a great Friday, and thanks for your time watching this video.